We are back. There's more bad news is good news scenarios playing out in front of our eyes. We're going to be discussing that, everything happening with regional banking. Kevin called it on Monday. You love to see it. But all of that and more we discuss today on Money Never Sleeps. Welcome back to Money Never Sleeps. I'm JWeb. That's Kevin. We're excited to have you with us today. Before we get going, hit that like button, subscribe to our channel. Nothing that we say is financial advice. We're not financial advisors. We're just a few guys sitting in our mom's basements enjoying talking about the market. So please do your own research before making any buys or sells. Kev, we got more data this morning. We're in that bad news for the economy is good news for the Fed situation. Dive into that in a second. We got a warning today about some regional banks that you called on Monday. It's getting a little dicey out there. Things are rough over in Europe. Crypto is pulling back a little bit after yesterday's big gain. A lot happening in the markets. It's a really fun week as we were hoping for. Plenty more to come on Thursday and Friday. But what has your attention right now? Where do you want to start today?
Yeah, I think the banking is probably the most important thing that I've been keeping an eye on all this morning. I think crypto is also something that we need to keep an eye on too. Whether we want to start in crypto or not, I think we kind of called it yesterday too. If you didn't see it on, the Twitter Spaces, we talked about Bitcoin going to that one level, got rejected right off of it. Seems like everything just retraced completely, right? So people are buying the news, buying the rumor, selling the news. Or yesterday they bought the news, and then people sold it right after. So we could start with crypto if you want.
Yeah, let's give it a few more minutes to see if who else wants to come in. I know we have a few people who want to join us live a little
For
bit
sure.
late. Ace, good to see you. Like the man said, he's a smart one. Smash that like button. Let's just do a quick recap of this morning's numbers.
Oh,
We
yeah.
had ADP jobs data come out. Expectation was for 200,000 jobs added in the private sector. That would have been down from 317K last month. It actually came in at 177. So, as of right now, we'll see if there's a revision next month. But as of right now, that number came in cooler than expected. That is a win for the Fed. They want to see the labor market ease up a bit because it's been running really hot. We also saw Q2 GDP revised down from 2.4% to 2.1%. We'll get the final number next month. Once again, the Fed likes to see that. It shows that the economy isn't quite as strong. Maybe they can ease up on rates. The probability for a rate hike in September decreased once again. It is now about a 90% chance that they skip this month. I also believe that the probability for a rate hike in November, on November 1st, at that meeting, which would be their second to last of the year, also went down. So we're at this point where maybe, I said the other day, it was about a 51% chance they would hike in November. That is down to 44% chance. The higher probability is that it will be a skip once again. So we're starting to see it play out that maybe we have seen, maybe there's still a lot of data to come out. A lot can change. Maybe we've seen the last rate hike. I still don't know. These numbers are a step in the right direction. Tomorrow's PCE data is going to be very important. That's what we have a lot coming out tomorrow morning. We get personal income, personal spending, two that the Fed is going to look closely at, as well as the PCE and core PCE numbers. Can we see a budge there? I don't know. There's I'm hearing some like lingering effects that maybe we're going to see core PCE tick back up a little bit tomorrow, which wouldn't surprise me. The expectation on Wall Street right now is that we're going to see core PCE come in at 4.2%, which would be up from 4.1 the previous month. If that's the case, I mean, yes, there's a lot that goes into that, but you can't be super excited if you're at the Fed and you're still at 2 times what your mandate is to get inflation down to after all of these rate hikes, after hiking for 16, 17 months. Like, for you to still be twice the number, that's not great. And so we'll see tomorrow if it comes in really hot. Let's say it comes in at like 4.4, watch out below. But if we get a surprise to the downside, it comes in at like 3.9. I think the markets are going to have another strong day.
Yeah, it's very possible, right? I think the reason why maybe we're anticipating that core number being so high, it's because the government hasn't stopped spending. We do have quantitative easing on the Fed's behalf, but the government's been spending nonstop. And again, we have tons of issues that are going into this too, right? We're seeing tons of data today about oil, and that just kind of seems like there's going to be a lot of pressure on energy going into the end of this year. I saw somewhere where it was like Europe is going to be buying most of its natural gas from Russia going into the end of 2023, and it's like a huge spike up. So I think that it is not out of the question to think that PCE, that core number, comes in hot tomorrow. Again, if it does come in below expectations, we also need to keep in mind about these revisionist economics that we've seen over the past few months. Everything comes back revised, and it's just kind of painting this picture that the economy is kind of slowing down, right? That inflation sure might be coming down, but there are consequences of it, and we're starting to see that. So I think people being scared about maybe the core PCE number coming in, at 4.2%. I don't have the answers here, but I can guarantee you that we are probably going to see a number that isn't great tomorrow. But if it is great, yeah, I think the markets are most likely going to, pump into the end of the month. Month close is going to be up higher than we probably anticipate. But then again, anything could happen between now and the end of the year. And if something bad does happen, maybe we don't get any more rate hikes, but we do start to see cuts because maybe they broke something.
Yeah, absolutely. It's going to be a fun one tomorrow morning. I'll be setting an alarm bright and early to be watching Bloomberg for all the data because I'm a big old dork like that. But you know what? I wouldn't have it any other way. Let's get into some of the banking now. I think that's really
Okay.
important. A story came out this morning around 11:30 Eastern that the Fed has issued warnings to some of the more medium-sized banks, ones that hold assets in the area of 100 to 250 billion dollars, including, telling them that they need to shore up capital and liquidity. They need to, there's some technology and compliance discussion in those warnings as well. Some of the banks there include Fifth Third. Who else, Kevin? M&T,
Citizens
Citizens
Financial,
Financial. Yep.
Northern
Ones that were
Trust.
discussed on Monday's show as having high exposure to those loans that you brought up, Kev. So not great. Now, is it like caution? Like, is it reason to like panic and withdraw all your money? I don't know. Did I have banking shares that I sold this morning 2 hours before that story came out? You're goddamn right I did. And that timing could not have worked out any better. So, oh boy, it's me being the optimist that I am. I'd like to think that because, the Fed learned from 2008 and there are warning signs that have gone off as a result of what they learned from that will prevent further banking collapses. Could that be me being overly optimistic? Sure. Thankfully, I do not bank at any of those, so I am not panicking at the moment. Do I think that I might take that money I sold from those shares and just buy, actual physical gold? Yes, I think there's a very strong probability I do that, and I just keep that at home or buried in the yard somewhere, not at home, because that's a terrible idea. Don't come to my house and try to get those. But I want to, not having all your money in the banks right now and self-custodying, I think is just, whether it's crypto or physical assets, I think is just really important. Stockpile
Yeah,
cigarettes and rice if you need to. I don't know.
it's not a bad idea. Cocoa beans too, man. 12-year highs, insane. Should have been cocoa, guys. But anyways, yeah, the banks are in a place right now that is very, very critical, I think. I showed this chart a few days ago. I definitely made some changes to it. Again, this is information from Best Evidence YouTube channel. It's created by John Titus, smart guy. And I think he kind of gave us a cheat sheet, right? He gave us a cheat sheet, I think, that is painting a really good picture of what's going on here. So let me try and break this down real quick. Orange means that the bank's dead, right? That's what this orange color code means. Yellow are ones that I personally have puts placed on just based off some of the data here and also, risk reward, what I think is, where I felt comfortable putting in, some capital. Anything that's yellow, that's what I just said. Green are ones that are, in that top few that are here. I haven't done anything with them, but they're still at risk, in my opinion. And then the blue ones that we're seeing down here are the ones that we talked about just a few minutes ago. These are the ones that the regulators were pointing out. Now, the problem is they have to, have all that debt. They have to make sure they have that debt on hand, right? But there's nothing they can really do with it. It's just kind of like a safety, like a deposit that's there just in case anything bad does happen. So they pretty much are just having like a rainy day fund. And that's not great because if they are to issue debt right now, they have some of the worst credit ever since Fitch, Moody's, and S&P, Standard and Poor's, all downgraded most of these banks, right? So now it's going to cost them even more to make sure that they have that money on hand. It's not a good look. It's not at all. This is probably coming at the worst possible time for them. And we do know that there's a lot of things that are leading up to, September, October being somewhat harder on these banks, these institutions. And, we do forget that this is Q3. They're going to have to file their taxes as well. We're going to probably get a lot more clarity on how some of these banks are actually doing. It's kind of scary, but again, it's really wild that those 5 banks that they listed are, for the most part, they're all in the top 34 that are listed here, but from 33 on this list to 21, 17, 15, 10, they're all here, guys. These banks have high exposure to FHLMB. The percentage of Northern Trust equity that is those loans is 68%. If we look at how much their deposits are, it's 37% over 250K. For regional bank, I would assume that's pretty detrimental. Citizens Bank, that's got 53.73% over 250K deposits, and that's at 35%, 36% almost for equity short term. That is FHLMB. And I do want to talk about a few other ones that I personally
So
shorted.
real quick, the
Yeah.
ones that I sold this morning were shares of PNC, Truist, and Ally.
So
So ones that had like almost 50% for two of them, and then one of them's at like 73%.
did you use this cheat sheet for that?
Yeah.
Awesome. I'm so happy because I did the same exact thing to buy some of those puts for them. So Truist was one that I did not like how it looked at all. Again, this is just my opinion. I'm not telling you to do anything with it, this bank. I just think that this is a really interesting, set of data here. So Truist was one that I decided, you know what, fuck it. This seems like some bad numbers here. And also, I didn't like that the merger that happened in 2019 probably told me that there was some trouble with the banks back then. Mergers can be good, but usually they try and, lower costs when that happens. So that's what I thought was it's a bad thing to see right now that they're on this list. But PNC was one that I literally shorted before the show. I was looking at it. I saw that PNC had a ton of branches closed down recently. And I saw, short term FHLMB loans. Where are we? PNC. Yeah, it's 32 mil right here, and it's less than 1 year. That means that they're probably short term, really tight on capital. Wells Fargo is another one that I shorted before the show. 32 again mil right here, less than 1 year. So that means short term they're really low on capital. It's just right now it's not being promoted anywhere, but gotta look at the data. I think there are tons of warning signs out there. Just be safe out there. Obviously, don't overexpose yourself to some of these regional banks. I think there are some that are too big to fail. JP Morgan, I think, is always going to be there, but they're always there just to acquire more banks. So I think if any of these banks do fail, maybe the government doesn't step in, but maybe some of these other banks like JP Morgan, Bank of America, very similar to 2008. Now, they bought Washington Mutual, they bought Bear Stearns, they bought Merrill Lynch. It's very possible these big banks do acquire some of these if anything bad were to happen. I just don't think that the liquidity is there that they need in order to protect their customers' deposits if they want these regulators want them to increase their risk limit.
This is part of why, even though we're nowhere, we're not where we think that we're going to go with like the price of Bitcoin or Ethereum. This is part of why I'm totally fine putting money into those assets and self-custodying them as opposed to keeping cash on hand, like in a bank somewhere. Like, fuck, keep it in stable coins and self-custody that or something. Like, I just do not, if you don't, you're probably right on the too big to fail for like JP Morgan and, some of the mega banks. But if you don't have that, if that's not an option near you, if you don't have, the possibility to use one of those, fuck, man, I would rather self-custody and just have a checking account that really I put my, if I got to make a mortgage payment, I just move cash into there and I just do that as opposed to like holding a fucking savings account for 4%. Like, just give me the crypto, give me the USDC, the Bitcoin, the ETH, whatever it is. I would feel much better at night knowing that was, and it's the thing is like, you're not going to keep it in a safe deposit box at a bank because like, who the fuck knows what's going to happen there. So it's like, I don't know, man. Self custody is just, this is part of why you need to do it. Like, plain and simple.
Yeah, and again, I think you made a really good point. It doesn't have to be Bitcoin or Ethereum, stable coins. I'm not saying that they're 100% safe, but if you're afraid of the price fluctuation, but you still want a self custody, you want to make sure that you're able to have that cash on hand. It's not a bad option, right? It's at least you're keeping your value at what you deposit it as, and you don't have to worry about, fluctuations in the short term of, say, Bitcoin going to, I don't know, 15K or something like that, right? At least you still have your capital for the most part on hand. But again, nothing's guaranteed. We saw how USDC did have a bit of a depeg moment. Again, came right back.
And
But
people, dude,
banking crisis though.
Yeah, but I'll always remember the weekend where people were going 100x long on a stable coin.
I mean, it paid off, did it not?
It
Good for these people. Smart move.
It was one of the craziest things though I've ever seen. Like, yeah, I'll go 100x long on this USDC. Like, what the fuck?
Last thing I will say on the the banking sector is the Bank Term Funding Program, the one that Powell, let's call him JP Biden, Joe Biden, came out and said, it was to protect, the institutions, the banking institutions, and the ones that they feel are confident that are safe now in the banking sector. That's supposed to go away in March. But the question is, if you start to see some of these banks, hitting hardships, then what are we doing? They keep that alive, then that's just going to prolong the issue. That's why I mentioned it on Monday that they have to kind of let some of these go or be acquired by some of these other banks, just the way it has to be. I think if we want to get out of this bear market, get out of this high inflationary period, they have to let it go. And I think that maybe these regulators saying like, no, you guys have to make sure you have the fucking deposits at this point. Have to have that security. Might be, hinting at the point it's like, maybe we don't bail you out. Maybe you guys need to make sure that you're able to take care of your customers' deposits. Otherwise, you're fucked. We're not gonna treat you the same as, I don't even know who they bailed out. They bailed out fucking everyone back in March. But I think that we are going into a very different place. But we have to keep in mind, look at this chart, study it. I think that this guy was right on the money with a lot of this stuff, and we'll see how this progresses over the next, few weeks to months.
Absolutely. Let's move on. I want to make sure we get through everything today. Let's get into, I say we get into crypto, and I want to start with ETH because I want to look on the daily and I want to see how close we are to this death cross.
Oh yeah, absolutely. Here we go. ETH on the daily.
It's like a ball hair away from going into a death cross, isn't it?
Yeah, but man, they try and hold this shit up as much as they want. But yeah, look at that. They're touching. It's like a Chinese finger trap right there. Pretty soon they're going to touch on completely.
Yep. Okay. I can see the little bit of a spot there.
Oh, I didn't know you got that close. I was like, what the hell is JWeb doing? I just went back to the screen.
So I can see it. Okay, there we go.
There we go. We're close. But if we can see how much it moved the last day into, if we look previous day, it moves considerably. So I think it's going to touch at the end of today. If it doesn't, then maybe one more ball hair away, then we finally get there. But right now, I think that this is going to touch. We're very close in the daily. And the thing that keeps pushing this down is the fact that we keep closing below the 200 because the 50 is just going to follow that. And the 50 is faster than 200 just based off the averages of the past, 50 days versus 200. It's going to move a lot more quickly. We got rejected off right here. I think that this is the top of this wave 4. I would hope so. I think this is, 3 waves here. We got you do wave 1, 2, 3. That should, within this corrective wave. And now we wait for 5 waves down. We can see that we're almost overbought on the daily today. I think this is, fuck off TradingView. I think this is going to go up there pretty soon. Honestly, TradingView, you were down last night. Fuck you guys. Just kidding. You have great software sometimes for free. But yeah, this is, I don't think we're going to test this 200 EMA. Could we? Absolutely. It's very possible, right? Maybe we get some stupid amount of liquidity that shoots up. However, I think that we are seeing some pretty good structures to the downside on the smaller time frames. See wave 1, wave 2. This is wave 3. Currently, you're finding a bit of resistance here. Maybe it goes up for 4 and then it comes down for 5 with a bit of an extension. Regardless, I don't think that matters. I think we just need to wait for this daily close to happen. I think as long as we stay below that daily 200 EMA, I think we're in a pretty good place to see that death cross. Be wary of fake outs because there's always that possibility. Worst case scenario for ETH, though, if it is to go up to that level, is we don't want to cross 1800. 1800 would be invalidating this entire structure. I don't necessarily see that right now, but again, we saw what happened yesterday. There are definitely liquidity hunters out there. There's definitely lots of TUSD being minted. They just minted 200 million more today. Just be on your toes. But yeah, I think yesterday was a scam pump, and I think that this pretty much set us up for the perfect correction to now go into, the final wave down, and that should offer us some downside going into the month and into next month. And again, monthly close, I'm not too worried about it as much as I was, a week ago. We got this little pump, tells me that we're likely going to see this month close as a bit of a fake out, is what it is. Next month, I think that we're going to get a little bit more honesty, and the structures are there to push down. Again, never get too overconfident though, because we are getting into the red zone. September is the red zone, in my opinion, and we'll start to see some of these markets move. That being said, we should look at Bitcoin. So right here, I'm going to pull up the hourly. I realized what type of pattern this was, and makes sense. This is called an open ass pattern. It's an
Okay.
open ass pattern. Pretty much it stinks, but no, I'm just kidding. This is a really weird pattern. It's the Bart Simpson pattern that we talked about yesterday. Came down, Bart's hair went straight back up. But we have to go into some of these levels. We see that on the hourly. It looks like it's coming down pretty significantly, right? I saw originally only 4 waves. I think I was wrong. I think there was a 5th wave there, but you have to go into the 30-minute time frame, lower than an hour, to see it. But if we look at the daily, we're going to see right where this wicked off of, right? Let's get rid of this blue line. We know that's 5 waves going down. This is wave 4, but we went right to the 200 EMA. I mean, the 50 moving average on the daily. And the 50 moving average was at 20. Well, yesterday it was at about 28,154, and we hit 28,142. Actually, no. So this was lower than yesterday. It was about 20. It's like probably 20,040 or something like that. But pretty much we hit it, and we got rejected right off of it. And we can see today that we're starting to see some red. We found a bit of support right here on the 200 EMA on the daily for Bitcoin. Do I think that's going to last? I think it'll hold, if anything, going into obviously tomorrow, the monthly close. Whether the price decides to move in one way or the other before then, I have no idea. I think we are trapped between the 50 and the 200 EMA just looking at this. But I do think that this is probably our end of wave 4. Could we push up one more time? Sure, we can get a double top here. I don't necessarily think it's going to go higher than where we already tapped, maybe 28.2K. Again, we can't have it go above 28,577, otherwise it would invalidate the next move down. But since we did push up pretty significantly here, I think that we are going to go a bit deeper down into the wave 5. So with Bitcoin right here, as long as everything stays, I think that once September hits, we might start to see this finally trend to the downside. And I think it is going to be pretty significant. I think we will be below 25K. I do think that we're probably going to test maybe 23,629. I think this is my level. And again, this is my conservative level. Anything bad happens, then obviously, all bets are off. Anything can change. We have to look at the monthly as well. I think the monthly level that we need to close below doesn't matter as long as we close out of this blue channel, this blue parallel channel that we've been trading in forever. You can see that we closed out of it. We're up a bit today. We try to close into it. I don't think we're there yet. Again, if I look at the daily time frame, I think it's a better view. Yeah, see, we didn't even test it right there. That's where we would have to test, but we got rejected off the 50 moving average. I don't think we're going to close this month in this blue parallel channel, which is good. If you're a bear, that's a good sign. That probably tells you that massive bear, it is a bear flag. Massive bear flag is ready to break. And if we look at the monthly once again, we know that we are extremely overbought, or we will be extremely overbought. Yep, this month. So come tomorrow, it's going to be an important close. We'll see how the stochastic RSI reacts, but I wouldn't be surprised if this is leading us into that similar pattern that Matic played when it put all the way up to 158 and then it went down to 50 cents. I wouldn't be surprised if this is the same pattern where it just breaks down from here and we start to test some of these lower levels of support, and wouldn't be surprised if they become resistance over the next 6 months.
Okay. It's going to be a big day tomorrow with all that inflation data, monthly close for crypto. We're moving closer and closer to that death cross. Like I said before we started filming or start recording, at this point, I'm not trying to catch the bottom of Bitcoin. I just want to get, good value on what I'm going to buy. And we've just seen so much resistance here. And the upside is based around this ETF. And that really seems like that's about it.
I know. It's the only thing.
Is that even in the short term, would that just be another quick pump to then sell the news, as opposed to all of the other stuff going on, whether it's continued high levels of inflation here, what's going on in Europe? We didn't even touch on that with, Germany seeing inflation up into the 6s. Spain saw a little bit of a move back up in inflation. We're going to have more countries in the Eurozone tomorrow. We're going to hear from them. We're gonna have our inflation, in the U.S. There's just it really still seems like the downside has so much is just likelier. Like we're playing a game of probabilities here. Like what's more
Yeah.
likely to happen? Bitcoin goes to 40K in the next 3 months, or Bitcoin goes to 20K in the next 3 months. And to me, the probability of that feels a lot higher in the 20K range. Now, could it go to 15? Sure. Am I going to be buying it at 15? Maybe a little bit, but I'm comfortable if we get down to the 2022 area of buying some more, just because I feel I'm not looking to get the absolute pico bottom, right? I'm just looking to accumulate some more of it at a reasonable price. And I think to me that's reasonable. But yeah, it's just that we're in this waiting game, and you gotta stay patient, right? Like the best returns are going to come to those who can remain patient and not give in to these short-term pumps. So that's just like mentally where I am at with everything going on in crypto at the moment.
Yeah, it's man, it's really aggravating. I think this Bitcoin ETF thing. I don't think this is how we start a bull market. I'm sorry. I think there needs to be max pain. I think people need to be afraid, because if retail is excited that the bear market's over, it's likely not. Okay, 2022 was bad, but it wasn't terrible. Okay, I mean, it could get a lot worse.
I mean,
It really could.
it was 2022, May, June, July of last year were brutal. Like
That
it
was
was every month we had another huge collapse, like another massive, massive collapse.
an
And so,
appetizer.
if I'm looking back on it, like even April, like honestly, it was April, May, and June were the worst months, with June being an absolute kick in the gut. Bitcoin went from 32K to 20K in that month alone.
But
Like,
let's look at where we were too, right? Those players failed on their own.
yeah,
They all fucked up. FTX too. It wasn't a matter of interest rates going up. These guys fucked up on their own. Now we're in a place where interest rates are extremely high. Liquidity is pretty much gone. I honestly think that there's two places where you can draw liquidity from right now: stock market and crypto. That's just my personal opinion. I think that as we see these institutions, they have tons of these assets on hand. They're going to have to sell some of them off in order to fucking just stay solvent. That's the problem, I think, right now. And we weren't in that position back in 2022. And I think this is a bigger problem than where we were in 2022. I think that not having liquidity to, operate some of these businesses that are holding tons of assets for some of these individuals is way more of a crisis than, FTX going down, right? I think that's the thing that scares me the most, and why I'm so fucking bearish, and why, even though I see people I really respect say that, oh no, it's up only from here. If we underestimate the possibility of danger, it will strike, and it will strike when you least expect it, and it'll be max pain. I still believe that max pain is out there. I'm not looking for him. I just know that he's coming, and I want to make sure I'm prepared for it.
yeah, I'm still, I'm looking at the monthly for Bitcoin on my end, and I still see that very similar pattern of, the move up in April, May, June of 2019, and then the move down beginning in July to where we are now.
Let's show
And
that.
from September of that year, I'm not going to look at wicks. I'm going to look at like the actual candles themselves. But like from September that year till the bottom, it was another 34% down. Okay. So I think it's reasonable that we see another 34% down between now and, whether you want to call it like January, February, March of next year.
Were you talking about 2018?
2019. If you zoom out on it, we're in a similar structure to 2019, like from where we are today. Like if you look at like kind of some of the monthly moves up, we saw that move. We're starting to see a little bit of a retracement. There's a lot of sideways movement there, but you can't really see the scale of it. It was still percentage wise a very big drop down. So, that's why I said 20K. I'm cool with that, because that's another, 35%, 30% from here.
I will throw this. I will throw this out there because I am fucking bearish, and I'm going to look at the bear market from last time. And you and I were talking about this before the show. We've talked about this on the old podcast we used to do. We were talking about this back in July of last year, and I think this is still one of the most important things. This is the 2018 bear market. Come November to December, it dropped significantly. This is what you still have to keep in mind. I think that, look at this, down to where the bear market bottom was, it dropped about 50%. So it went from, what was it, $6,610 all the way down to about $3,310. that's still very possible. And this is using last bear markets where we are now. And again, anything could change. I do think that we are in a similar structure, like you said, in 2019. It looks identical, like the fractals do. But I do think that this possibility of that drop is still very likely. And the reasoning for that could be a multitude of reasons. I really can't tell you what's going to be the thing that collapses this market. All I know is that it's coming. And it just seems like we're in a place where these people are making moves now. I think that we're seeing a bit of a fake pump into the end of this month. I think that Bitcoin right now is in a place where it's very fragile. Could go either way. No one really knows, right? But I do think that we still are edging our way down. I don't think that we've broken any structures to the upside. I mean, to the downside that are now going up. I think that people are getting faked out on probably a wave 2 bounce. Wave 3 is coming. Guys, it's probably going to be I honestly think that it's going to go below 20K. But again, I think that we have to hit these targets first and reassess at the time being. I think right now, let's focus on just, breaking through 25K, see where that ends us up. And if anything happens at that point with banking or, I don't know, fucking escalation, energy, anything like that, then we'll reassess. But I do think that we are trending to the downside, and that November 2018 to December 2018 is still an extremely highly likely possibility. Even if we are at 20K, that thing could still happen.
Okay. There you have it, folks. That is going to wrap it up for today. Another great one. Appreciate everyone who's watched this back. Once again, hit that like button, subscribe down below, drop a comment, share us out on social, all that good stuff. We'll be back tomorrow, discuss the latest data that is coming in, personal income, personal spending, PCE, big day, exciting morning in the markets. I'm going to start it bright and early. Cannot wait. But I hope everyone has an awesome rest of your Wednesday. Stay safe out there, and we'll see you next time.
Take care, everyone.